Welcome back to another Trade Alts technical analysis, and in this video we're going to cover the insane Bitcoin price action that's been taking place over the last couple of days. But really we're going to start off on the macro time frame, the high time frame analysis, and we're going to see what's going on, see if there's any clues that tells us where Bitcoin might be headed, what possible price targets there are. Then we're going to go all the way down to the low time frame and see what's going on in the current price action. Let's get to the charts. All right, so here we have Bitcoin on the monthly time frame. So this is very high time frame analysis. We're on BLX chart, which is, it has the most Bitcoin price action of any other chart that I'm aware of. You can see it goes back to 2010 over here. But this is a logarithmic growth curve. And this has done a phenomenal job catching the macro highs and the macro lows of the Bitcoin cycles that we've had. So if I'm gonna actually go down to a weekly time frame, so that you can see in kind of a little bit better detail. I'll actually start back here. So 2010, you have your run up to your 2011 macro high here. And this was at $30, which is pretty crazy. Imagine that. So you hit the top over here, and then you come all the way back down to the bottom, which is about $2. So that was a pretty crazy retracement back then. But catches the lows, and you get a nice grind up movement price action here. Till you get another cycle higher in 2013, and this was at $1,163, something like that, before you get another pullback here. So you can see already these are two macro highs and lows that have been caught by the logarithmic growth curve. So moving forward, you can see that we again grinding along the bottom here before coming up to this, to hitting the top of the channel perfectly over here, which was your $20,000 Bitcoin high in 2017. So what have we done since then? This is kind of the most recent top that we've had, right? Well, come right back down to the bottom again. Nice grinding price action. You get your move. We come back down, grind a little bit more, and then this happens. So you're thinking, oh, this thing's broken now. Well, if you go back to this candle right here, which is March of 2020, what was going on in the world? March 2020, coronavirus. So everything was destroyed. All the markets were, all the markets were blood red. Everything was crazy. People were panicking. So this, to me, like this, I mean, it's not a surprise that something like this happened. We actually broke the logarithmic growth curve here. Then we managed to get back in, and now you can see that here we are, another cycle. We're pushing up, right? So again, if you zoom out, this thing has done a phenomenal job catching every high, every macro high that Bitcoin has ever had, and every macro low. It's done a phenomenal job with that. So would I expect this to continue moving forward, and what can I get out of looking at a chart like this? Well, first of all, you can actually get some targets. So this thing is based on time as well, and you can see the longer that price moves, right, the higher, the steeper this growth curve gets. So that means the higher prices that you would kind of look for, which also the support region that you would hope to hold also rises with time. So you can see here, it's February, almost March. If we were, and again, every candle is a weekly candle, right? So let's say magically Bitcoin was to have a huge move this week, which, I mean, if you're looking at price action this week, you're saying this is not going to happen, and it's very likely not. But let's say hypothetically it does, and we come up to hit the top of this growth curve here. So where does that put you? You bought at $100,000. Okay. So as time progresses, so let's say that, if Bitcoin hits the top of this growth curve, 2021, so or the very end of it. So this is January 2022, let's just say. Where does that put you? So we're right over here, about $145,000. If you move forward, so if you fast forward to 2023, so the end of, or the beginning of 2023, end of 2022, right around here, where does that put you? $229,000. So you can see, like, this thing can get pretty crazy pretty quickly. And I mean, again, we're looking at this from a macro high time frame perspective, so you have to keep those things in mind. Like, this can take years to literally play out. But again, it shows you like the upside potential for Bitcoin. As a lot of you know who have been in this market, like we're looking, you know, a lot of us are looking for higher prices. This can help you, you know, maybe have a good take profit, maybe a good area to look to take some off if that's your thing. But this is definitely one of those charts that I will be watching very closely to see if Bitcoin does manage to get up to the top of this growth curve. Where does it hit? What the price is? What do things look like, you know, around that time? And the thing that I will mention that's a little bit different, at least in my opinion, this time around, is you kind of have to look and see who's playing the game right now, right? So back in 2017, back in 2013, like you didn't really have like big institutional money that was coming into the markets then. And I would argue now, like you look, Square just announced that they bought, I think it was $170 million of Bitcoin. You know, you have Tesla, you have MicroStrategy, you have a lot of these big companies that's snatching up a lot of Bitcoin that's out there. Like you can argue that it's possible, you know, if we were to see this broken, this growth curve, like this would be the cycle that could do it. So, you know, who knows how crazy Bitcoin could get. You know, it's not financial advice or anything, but I think there's a pretty good chance that Bitcoin will see six figures at some point. You know, as far as timing goes, it's hard to say, but I would definitely be monitoring this as we move forward. So I just wanted to show you this. Again, this is called the logarithmic growth curve. And as you can see, one more time, it is literally called the top and the bottom of every cycle so far. So this definitely has my attention. So moving on, I'm going to go to this. So this is the same chart. So this is the BLX chart on a weekly time frame. So now every candle is still a week. But what I wanted to show you, so I kind of poke fun sometimes with my YouTube thumbnails and my titles and all that. And, you know, like, are we having a rough week? Absolutely. So like for those of you, first of all, who are brand new to crypto, I think you've officially been baptized now. Welcome to the crypto market. But for those of us who have been in crypto for a long time, we've been trading it, like it's just another Tuesday. Like these things happen, you know, it's not like it's not too surprising to anybody who's been in here a long time. Like these moves happen. They're part of trading. They're part of being in crypto, and you just learn to expect them to happen, and you make your plans accordingly, right? So what I kind of want to point out, I'll start here, okay? And this is our recent price action. So this right here is in January, and I'll redo this, that way you can see it. So I'm measuring pullbacks here. So we had our move all the way up to $42,000, and then we dropped all the way down to 28. I think it was $28,809. So that from top to bottom was a 31.3% drop right there. Our current drop, I'll delete this again just so you can see it. And this isn't actually, I probably shouldn't have done that because BLX actually hasn't updated fully. Like you don't have all the price action, so I'll put this back. But this actually is our low right now. So if you go over to the Bybit chart, our low is around 44,600, something like that. But anyway, so currently our pullback is 23.3%. And that's what we're seeing, you know, right now in the charts today. So the thing is that I want to point out is that historically, whoops, let me fix this. Historically, things like this happen pretty often, and you might not know it. Back here in 2017, so you can see here. So in January 2017, we had a 38% pullback, and this is the beginning of the run here, right? So we had a 38% pullback. In March 2017, we had a 32.5% pullback here. So it literally went from $1,324 down to about $888, something like that. And then you look at this parabolic type move that you get out of that. You get another correction, this time over a 40% correction. So that was pretty big. And then you have another 40% correction right after that, which this is kind of similar to what we're seeing now, right? So we had our 30% pullback that I showed earlier, and we're in the middle of doing another one right now. But you can see like what happens after these, right? So price moves up, you get another 30% pullback here, and then you get your blow off top all the way up to 20,000. So like the thing about this is when they're happening in real time, you panic because you're thinking like, oh my goodness, like this could be over. This is insane. Like I don't want to be in here anymore. But in reality, when you know how Bitcoin has performed historically, when you actually zoom out and look to where you are today, these look like nothing. Like, do you see that over here? So all of these 30-40% pullbacks that we had in 2017, right? And this is a linear chart. Like this is real. This is how it actually looks. So if I were to switch on log, you know, it doesn't look, you know, looks a little neater, you could say, but this is actually how the chart looks. And when you look at where we are today up here, everything that happened back here when you were trading in 2017 that felt like today ends up being a tiny little blip on the chart that like you don't even think about anymore. So am I panicking right here? No. Why am I not panicking? Because I know as a trader historically how Bitcoin has performed, and drops like this are expected. Like they happen. It's a fact, right? Like we already looked historically what Bitcoin tends to do. So here I'm not panicking. Like I'm not concerned. I expected Bitcoin to drop. Like, you know, like I'm not freaking out about it, but I am using, you know, some of these historical price action movements to help my current trading out. So this again, just to demonstrate, pullbacks are a thing in Bitcoin, they're a thing in crypto, and it's not something that, you know, it's something that you have to understand, and it's something that you just have to incorporate into your trading or your buying or selling or whatever it is that you're doing, but you have to be prepared for them. So on my next chart here, so this is my Pitchfork, and I actually really like this Pitchfork quite a bit. So we're over on the Bybit chart this time, and basically how I pulled this Pitchfork is coming back from your 2018 lows here around $3,000, right? And then I take it up to the 13, you know, almost your $14,000 high, and then your swing low. So again, this is the March crash, you know, when Bitcoin got down to 3,600 bucks or so. So that's my 3 points that I use for this Pitchfork. I am on log scale, just because it makes it a lot easier to see, and it makes it a lot easier to understand, but it's still very relevant. So again, you can see like once we had our swing high and then we had our March crash, what have we done since? So you can see that price made its way all the way up here to the midpoint of the Pitchfork, which magically came where? $20,000. So what's significant about that? Well, that was your 2017 all-time high. $20,000 was a major level that people were eyeing for a long time. And finally here in December, we came up and tested it, which happened to be right at the midpoint of this overall Pitchfork. So like coming up and testing this right here as resistance, that added even more weight to this. And if you zoom in close enough, you can see here, we actually came up, tested it, and got rejected. So if you were trading here, Bitcoin came right almost up to 20,000 and then got a nice rejection. This is, you know, you're talking, this is a pretty decent rejection. So even on this, you know, it looks really small from here, but that was a, you know, 17% move down. And then what happened? We came up, tested it again, rejected off again before we broke through. So we broke through. This is when we, you know, when we created a new all-time high, and you got this crazy move that you've seen since then. But again, the midpoint, incredibly well respected. And that's what I want to see when I look at a Pitchfork, right? And you can see again, like these levels too, coming back here, pretty well respected. Like you can see you got support here on your 0.5. And again, so these are fib levels with the Pitchfork. So when we broke up, made a new all-time high, and you had your run up, where did you find your first level of resistance? Well, guess what? For those of you who follow me, or those of you in Discord know how much I love my golden pockets, which is your 618 retracement up to your 6.6 retracement. And I can't really do it because the box only goes left to right. I can't draw it angled as far as to my knowledge. But anyway, you come right up into your golden pocket and then you get your big rejection, right? And this was your 30% down move. So again, a key critical level on a Pitchfork, incredibly well respected. And this is what you want to see. So we came back down, tested this as support, and now we had our big up move. So where are we finding support again locally? Your golden pocket, right? So it's the same kind of level, same area right here. And that's currently where we sit on the Pitchfork. Now, the reason why I like the Pitchfork too, and this is kind of the similar thing to the logarithmic growth curve. As it goes up in time, your levels increase, right? So let me kind of zoom out here. So as time goes up, your Pitchfork is also rising. So the top of this Pitchfork, if it's hit, when it's hit, I would be very interested to see at what level that this hits at, right? So who knows? We could shop sideways for a while. We could even revisit some lower levels. That's certainly possible, certainly could happen. But when Bitcoin eventually does hit the top of this, the Pitchfork, I'm going to be paying very close attention to this to see if this lines up with anything else on my chart. So like, can I use this as another confluence level for my trading? So that's the Pitchfork. I think it's really helpful. It's something that I look at probably once a week, just to kind of gauge, look at some levels and see what, like, do they line up with anything of interest to me? But this is, I typically do my high time frame analysis every Sunday night, because that's when we get our new weekly closures. So our new weekly candles form. So that's when I like to kind of see what's updated, what's happened since then. And then, so here we have, so this is Bitcoin on the weekly, and this is actually the Coinbase chart. The reason why I chose this chart instead of Bybit is simply Bybit doesn't have the price action that Coinbase has to populate an appropriate looking Ichimoku setup. So basically what I'm looking at here is, where is price in relationship to your mean reversion? Okay, so this is always something that I want to know, like levels to keep in mind. And what I mean by mean reversion is this yellow line. So this is your Kijun. And anytime price is near or at your Kijun, which I'll highlight right here, this yellow line, price is in equilibrium. So that means whatever asset it is that you're trading, price is at equilibrium. And that's ideally like, a really good area for you to be bidding. And by bidding, I mean buying, which again, this isn't financial advice or anything like that, but this is definitely an area of interest for me. So the weekly Kijun sitting here at 31,000. Your Tenkin, which is this blue line, is sitting at, roughly $34,800, somewhere around that area. And then here I have the yearly pivots. So this is also something from a high time frame perspective. Let me take a drink real quick. So again, high time frame perspective, we're currently above our R2 yearly pivot. And you can see we actually bounced off of it a little bit. We wicked through it a little bit here. Not really a big deal. But if we were to lose this R2 pivot, then naturally I would look to back down to the R1 yearly pivot, which is here around $37,650. So these are levels, again, very high time frame levels, yearly pivots. Like, these are things that I look at for like on a macro time frame to see, does this line up with any other levels? Like, can I use this for confluence and any of my other trades that I have? And then, so those are the yearly pivots. You can also change them to monthly, which, by the way, we're getting new monthly pivots, in about a week or so. So we're almost near the end of February. So in March, we're going to get brand new pivots. So I will definitely be taking a look at those to see where we're at. But already you can see the R2 monthly pivot we're using kind of as support. We're slightly below, but like this is right now, this is kind of where your local support is. And then your R1 sits at $40,852. And then your actual monthly pivot itself is all the way down here at $34,300, which is very close to your Tenkin here. So I think that's really interesting. But one thing that I talked about in the previous chart is we had our retracement, right? So we had your 31.5% retracement. So if we had a retracement similar to that, where would that put you? And if you look, a 30% would put you right at this R1 pivot. So that's interesting. Like that is an area that I will be paying attention to in case we do dip that low, which again is a low 40,000 area. If you had a 40%, where would that put you? Right at your monthly pivot, which is also your Tenkin. So I think, that's another level of interest for me that I would be paying attention to. And then another thing that I like to look at on the weekly time frame is actually your 21 EMA. So EMA means exponential moving average. And historically, like I'll actually turn Ichimoku off just for a second just so you can see. But anytime you're above it, things are bullish, and typically you look for upwards price movement. If you're below your 21 EMA, typically like things are bearish, and that's where you look for, moves that are bearish. So if you go back, same kind of principle, right? It's kind of hard to do this, sorry. But you can see like when you're above it, you literally, you tested this level a bunch of times right here. So your 21 EMA, you reclaimed it, or you basically reclaimed it here, and you rode it all the way. And you can see any time, if you were to have bought the 21 EMA any time back here, you would have done incredibly well. And you can see it literally rides it. Another really good retest right here. Retest here. And then you get your blow off move, obviously, to the $20,000 high. But you can see, like, just being above the 21 EMA, buying any retest, you would have done really well. And I'm not saying to do that, but I'm just pointing it out. Historically, that's been a really good thing to do. And here, same thing, like selling the 21 EMA, you did pretty good. When we're obviously in a bearish market, anytime you get weekly retests, that's an area of interest for a trade. So moving here, you're moving back to more current price action. Again, we reclaimed it, and you got your move that we're currently at. So where does the 21 EMA right now? Around $31,123, and this is rising really rapidly. So if I were to go back a week, you can see it was $29,380 about. Then you move to this week, and we're sitting at $31,124. This is where your EMA actually is. So it rose a couple $1,000s just from last week. So over the next few weeks, you could see it rise all the way up somewhere around where this pivot is. Which, again, if you turn on Ichimoku, you can see your 21 EMA, your weekly EMA is lining up perfectly with your Kijun right here. So that's really good. That's really good confluence that I like to see there. So we'll turn that back off. And then, so let's see, what do I want to look at now? So I showed that. Let's go to a daily. Let's go down a time frame. Let me actually go to my Bybit chart. Oh my goodness. By the way, you can see this. This is like, so this is what it's been like today. And honestly, I think we've had price come off the lows quite a bit, but you can see like this is all the alts, and it's just decimated. I mean, you're talking there, CRO down 30% today. Dash is down 16.5% today. Like you can see everything's just getting decimated right now, which happens, when Bitcoin has big moves to the downside, like you're seeing, altcoins usually get absolutely decimated. And so that's what I try to make sure that new traders understand, or new people to crypto understand, is when Bitcoin moves, like you have to be really careful if you're in altcoins, because like they will respond very, they'll respond to whatever Bitcoin is doing. And for a lot of new people, I'm sure they found that out, unfortunately. Hopefully not too many people got hurt, but it's definitely like, that's definitely can happen. So let's see here. If I look at the daily time frame, put this away. So what I'm going to do is I'm going to turn on my, turn on my SR levels. So these are my support resistance levels that I have. And right now, obviously, the major resistance is going to be your weekly open, which is all the way back up at 57,000, 57,500 area. We got a long way to go before we even think about that So I'm more interested in kind of what has happened. So you can see here in this yesterday, you know, when we dropped from our high, we actually found a bit of support right here on this daily. You got a really killer reaction close to this daily SR level. And then today, so today's candle, we actually retraced the entire move and found, you know, again, this daily level at around 45,000. That ended up being kind of your support area. So what I kind of like to look for in this, you know, kind of like what immediately the first thing that I see is like, I want to go back to previous price action and see if there's any clues as to like something that could give me a little bit of insight to what could happen. So back here, you can see back in January, you had a couple nice tests of your daily Tenkin right here. This is usually not financial advice, but it's usually a really good area to bid because of this particular reason. So again, you had this big move up, right? Tenkin was really nice support. You got a couple tests that you did really well, and then boom, you get your equilibrium, you get your reversion, or you get your mean reversion all the way back to Kijun. You got two tests of that pretty much before you got another crazy huge move off of that. And by the way, so if you had bid this, meaning if you had bought, you know, your daily Kijun here, just from this last buy, literally perfectly 100%, $29,250 move off of this Kijun retest here for exactly 100% move to the upside. I mean, that's phenomenal. Not a lot of other places where you can find trades like that. And I mean, this is in the span of a few weeks, you know, like literally 100% gain, which again, when you look at current Bitcoin price action, like things feel terrible right now. You know, we have huge drops. You just ran up 100% in the matter of a couple of weeks. Like it's, you know, these types of pullbacks, they happen, especially after really strong upward moves like that. Retracements, they're not out of the ordinary. Like it's not really that big of a deal. I mean, I would say it's not that big of a deal, but you know, again, like just to show these things happen. Like you had a literally 100% run up, and then right now you gave back, I think, what was it, 23% of that? Like it's not like you retraced the whole thing or anything crazy like that. So just something to keep in mind. But as far as the daily Kijun goes, so I pointed out right here, you got actually two tests, and they were both obviously hindsight trading this, right? Really good buys. So if you come down to this level, is there anything else? And like, again, what, like, I'll tell you this. I almost never take a trade based off of one confluence. And what I mean by that is if there's one indicator that tells me that it's likely a good buy or a good short or whatever it is at a particular level, I will almost never take that trade because I like to have multiple forms of confluence, right? I like to have more than one thing that's telling me, that's saying, hey, like this is a good trade. And the reason is the more confluences I have, and I have, like, you know, when you keep a trading journal, these are things that you're going to learn over time. But when you have more than one confluence, typically the more confluences that you have, so even if you have 3, 4, or 5 different levels of confluence or 5 things that are telling you this is a good trade, the more confluences you have, typically the better trade outcome you get. So that's typically that's at least what I found. But the more confluences I can see, the more reasons to get, you know, to tell me to buy or sell a certain level, it works out better for me. So the daily Kijun, you're sitting here just under 42,000. What else is in that level? Well, if you remember, our previous all-time high was $42,000. So coming back to retest this area wouldn't be the end of the world. Like I actually wouldn't mind that. Like that would be, you know, this was massive resistance. Obviously you got a big 30% retrace off of that before you actually were able to come up and take it. So coming back to retest this level and seeing, like, does this hold up as support? Wouldn't, like, again, that would be totally fine. If we were to do that, by the way, you're looking at around a 28, so it's really close to that 30% pullback that we've seen a lot of times historically. And if you come down to your R1 pivot, perfectly 30%. Now, I'm not saying that it's going to, 30%. Just because I see something retrace 30%, it doesn't mean, oh my God, I got to buy right now just because I know that, historically, it doesn't matter. But it does show you again that there is historic significance in this particular level. So coming back down here to retest your prior all-time high, not a big deal. Like I wouldn't mind, I wouldn't mind that happening. But again, you have your daily Kijun here, the prior all-time high level. Your R1 monthly pivot is here. So like that's been, this setup has been pretty decent. Now, actually, I want to turn something else on. So this is the 55 EMA. I'm going to turn off Ichimoku just for a second. So you can see recently, right? So this is after we had our $42,000 high, we came back down. Your 55 EMA actually perfectly, it perfectly caught the lows both times. So you had perfect retests. Your retest, move off of it, secondary retest, parabolic type move, right? Huge move off of this. So naturally, and going back here again, once you broke it, this is something that you didn't retest until recently. So seeing how price reacted at these two levels here, I am very interested to see where else, when Bitcoin eventually retests this, because it will at some point in the future, could be a while from now, but I would be curious to see what happens if this, does this hold up as support again? And if you turn Ichimoku back on, you can see here, it did an even better job, literally a better job than buying your daily your daily Kijun test. So this, again, this is like nice confluence though. So not only on the Ichimoku, the Ichimoku here, you got your mean reversion, Kijun retest, but you also had your 55 EMA. So this is another form of confluence that I'm talking about that would say, hey, all day long, like you have two different confluences, and I'm sure, back then there were more than that, but I'm just saying you have more than one indicator telling you, hey, this might be a good long opportunity. So that's a stronger buy. So I don't think I finished my what I was talking about earlier when I was talking about, I like to, when I take trades, I need to see more than one confluence. Ichimoku. So when I'm trading that, especially on higher time frame, that is the only, and this is just me personally, it's nothing that I would necessarily advise to anybody, but when I see, when I'm trading Ichimoku on the daily or higher, whatever, the daily time frame, I will take that trade a lot of times. If let's say you got a Kijun retest, I will take that trade without having other forms of confluence. Now, I'm not advising that, but again, I know historically, when I look at my trading journal, what my success rate is out of that particular setup, and it's made me more money than not. So that's something that me personally, I'm comfortable doing. Obviously, if I have time, I want to make sure that I go through, do the proper technical analysis, see if there's anything else that lines up. But again, when I see those Kijun retests, it's always of interest to me. So just throwing that out there. So, but again, the 55 EMA, you can see lined up perfectly with this, right? And where is it right now? Well, it's underneath Kijun, but also rapidly rising. This is also rising as time goes on. So if Kijun manages to flatten out, just like it did back here, you can see the yellow line right here, how it flattened out, which shows that there was a loss of bullish momentum. And then you got your mean reversion here before price took off again. If this started to flatten out again and the 55 caught up and gave me the same setup as it did here, I would probably take that trade. So not financial advice, but for me personally, I would be very, very interested, especially if that lines up with anything else. So that's the daily time frame. Let me see here. So is there anything else that I can see? And I'm going to turn off the EMA because honestly, I rarely use that. I'm more so stick to, my levels that I like to have drawn out, and the Ichimoku, especially in trending markets like this, I really want to know where that is. But as far as like the EMAs go, I like them for confluence. That's about it. I just like to throw them on, see what lines up. If there's any major EMAs that lines up with certain levels that I'm looking at. If there is, awesome. If there isn't, not a big deal. So I don't like trade solely off of them or anything. But looking at this, so like another tool, if you follow me for long enough time, especially you guys in Discord, you know that one tool that I can't live without is my Fibonacci retracement. So where would I pull a fib from? There's really two areas that I would pull a fib from. One of them is from here, which is kind of your swing low to your new all-time high, right? But another level that I like just looking at this is actually right here. So on the 31st of January, because you have your swing low, then you have a move up that's faded, you know, a bit, and then you have your low. So let me rephrase this, okay? So you have your low right here. It's kind of like your swing low. Technically right here too is fine. It's just a little lower, but this is closer to where price started breaking out. So that's why I'm using this. So you have your low here, but then you have, you know, you got to move up that was faded pretty heavily. And then you have kind of like a new swing low here, you could say, before the parabolic move. So I like to get things kind of as close to the real move as possible, because I found that those fib retracements technically work a little bit better. So if I pull one from here, okay, up to your current all-time high, where does this line up? So you can see your 382 here, this first wick down, pretty good job catching it. You know, it obviously went a little bit further than that, but looking at other forms of confluence, so you had your 382 Fibonacci retracement here along with your daily level here. That's not like, this is not a bad trade. And also it's really close to your Tenkin, so you could have drawn a little zone here, right? And then again, for those of you who follow me, you'll know that I like kind of my zones, and I'm going to draw one here in a second. But this could have been a really nice long if you had taken it. Now, I actually had bids laddered in here overnight that filled, and I got a really nice trade out of it. And I'm out of that trade, obviously. And then last night, same thing. I came up with some levels that of interest that I was in, and it was really between these dailies right here. It was, and I'll just show you real quick, kind of like what I was looking at. So it was really the Tenkin down to about here. And I had bids laddered even a bit lower that didn't fill. But my bids that filled were obviously in this box. And it was because I was looking, you know, before I went to sleep last night, I was looking, saying there's a pretty good probability that we're going to take this low out. Like, I didn't like this low that we had. I was looking at price action. I thought to myself, you know, like, there's a pretty decent probability that we're going to take the lows. So I set some bids. I had my daily Tenkin here, which hadn't actually been formally tested. You had your daily, you know, so you had two daily levels here, and you had your 0.5 fib retracement. So like, there's things here that were telling me, hey, like, this zone could be a nice potential swing position, or at least something that, like, you know, if your bids are filled, I would look to try to get out. You know, maybe it ends up being a scalp, which it kind of ended up, you know, it was kind of a quick position. I would say it only, you know, I woke up in really good profits, and then I took some profits out, moved my stop loss to break even, and then price actually came, you know, it obviously came back down and took me out of my trade. But at that point, you know, I posted in my Discord, I think I was 80% out of the position anyway, so I was more than happy. Like, it ended up working out. So that's kind of some recent trades that I did. But anyway, so you have your Fibonacci that's lining up really nicely. So your 0.5 fib, really close to this low, right? Your 0.382 fib, really close to this low. So you can see that, like, they're being respected pretty well. Now, some, like, obviously for me, this level, so this is your golden pocket, right? So this in between your 618 and your 66 right here. What does it line up with? Well, it lines up with your prior all-time high, which is a key level. This is a level of interest that I'm interested in to see, like, would this previous, like, does this hold up as support now? Because it was massive resistance before, you broke through it, you never really came back to retest it. Now, you don't have to, you certainly don't have to, right? But this is an area that I would be interested to see what the reaction looks like. you have your daily Kijun here, which historically, and like, you know, this is always a level of interest for me. So that sits right in the golden pocket. You can see here, you have your R1 monthly pivot. That's right in this zone, right? And then again, if you turned on your 55, as the days pass, it will get closer and closer and closer to this zone. So that's another area of interest for me. Like, so basically for, you know, and like, not financial advice again, I know I keep saying that, but I will be very interested if this zone is hit, because I think like this, and it's pretty easy to know where I'm wrong. And like below, you have your weekly level at 38,000. Like this is the only weekly level that you have, really. This is like the only weekly support resistance level that you have. Also weekly naked point of control. So like this should be, you know, if price does make it through here, like this is an area of support that I want to see held. If we start losing this, it could get pretty ugly. So as far as if I were to enter here, which I'll show you. So if I was to enter here, I'm not saying that I would enter right here. Maybe I ladder in, because that's kind of what I've been doing. So maybe you ladder in, something like that. And this is just to show, like, hypothetically, right? This is kind of what I would be looking for. And I think, like, and I'll get to this in the next, I know this video is kind of running on, but I want to be real thorough. But I think, like, the more that I look at things, this price action is pretty similar to back here. So I'll kind of circle it for you. It's just my opinion. The price action seems really similar kind of to what happened here. So the way that I'm kind of looking at this at the time, for the time being, is I think that like we could end up actually forming a range here. So it wouldn't surprise me, you know, maybe we come down and we kind of just chop around for a little while. You know, maybe not this long, who knows, but like maybe we just chop around for a bit, form a range here. And, you know, I would be totally fine with that. I actually really enjoy trading ranges. But to be honest with you, like if I got this entry, you know, I would look to take it up to near the highs. But realistically, for me, whoops, hold on. But realistically, for me, I would be looking to take this probably up. You know, I mean, maybe, you know, this is kind of an area that I had marked off, but I would be looking for quite a bit higher, to be fair, if I got this entry. You know, I might take some profit somewhere along the way just to make sure I lock something in, but this to me could be a really nice swing trade. So that's, this is kind of like what I'm looking at as far as a daily time frame potential swing trade that I'm preparing myself for. And, you know, I'd have to see, like, this is definitely something where I would want to be live in the charts in front of my computer monitoring. Like, I want to look in real time, see what's happening. I want to check the volume, you know, check some other things out just to make sure, like, to see, like, is this something that I want to take? So moving on, I think I'm actually going to go down now. And so real quick, I guess, if we were to lose this level, okay, so I'm going to actually delete this stuff now. Just to clean up the charts a bit. I'm gonna actually turn some stuff off. If we were to lose this weekly level, if you remember kind of what was going back on over here, right? So you had this kind of range that was forming here. It was kind of a range, and then you broke out. Now, here's something that I like tell people in Discord and anybody that, like, you know, anybody that I trade with. I always keep my old, so you can see this is my range value areas from the $30,000 to $40,000 range that we were in, right? So I actually keep all of these levels and I just hide them and I put them in my folder. But if price was to kind of come down here, you know, and start working its way back in to this old consolidation right here, for me, I would just, like, my brain instantly goes to range trading mode and I want to get right back into trading this range. So I still have my old levels here, as you can see. So it's kind of like, it's kind of messy right now. But I have my range point of control, my range value area low. There's still this naked point of control here at 31,800 that I saved. You have your range value area high. Like, these are all things that come into play if you revisit old ranges. So if price manages to come back down and lose this weekly level that should be support, and we start trading back into this region, I will immediately switch back to trading this range again until I'm given a reason to not trade it. But like that's, so as far as range trading goes, that's something, again, I do not delete. Like I always save old historic ranges, because if you come back to them, the levels that you had and that you were trading in that region will come back into play. So that's just a little side note. And let's see. So now I'm going to go down to, so I'm going to hide this again, because we don't really need to see it right now. But now I'm going to go down to some lower time frames, see what's going on. So now I'm going to go down to an hourly. Okay. Oh, wow. We're actually getting a nice, decent. So like on, I think that there's a, I know that the shorts are, there's massive hundreds of millions of dollars in shorts. And it really looks like we're in the process of trying to look like we might be short squeezing here. So just real quick, I'm going to pop down to a 15-minute. I'm going to turn on this. Oh, what do you know? Yeah. So this is 15-minute Ichimoku. So we're in the cloud right now, but we still are bearishly crossed. So the blue Tenkin is below your yellow Kijun, right? So you can see it looks like it might cross. So if you get this cross right now, and also you kind of you can't really see it, but this purple line, your Chiku span is in price. It needs to be above price. But these are levels of support resistance that I would be eyeballing as well. So on the 15-minute time frame, you look to the top of your Kumo, it's around $50,000. So there could be a bit of resistance around here, which if you go back to where we came through on this drop here, where does this line up? Well, it lines up with this kind of segment of price action here. So there could be a little bit of resistance if you manage to get that high. I just wanted to look at this for real quick, but I'm actually going to go back to the hourly, and I'm going to turn this off. So right now, like I'm just kind of looking at things to see like how do things look right now. So the first thing that I like to do is pull my Fibonacci retracements just to see, give me some levels to start building my case, right? Start building areas of interest for me. So that's one. So this is already level one that I'm interested in. This is the golden pocket retracement from your all-time high down to your current low. So obviously like this will change if price breaks down and makes a new low, but for now this is a good, this is a valid fib pull. You also could pull one from here, but I'm not like super interested in that at the moment. But I like to go from a very, your swing high down to your swing low. So if you zoom out, you can kind of see, this is ascending, but we came back down and hit this daily here. So if I go back to this daily, like one thing that I would be interested in is actually, I want to pull a range. I want to pull a fixed range. I'd probably start, does that make sense? Probably start here. So I'm going to pull a fixed range here. And what this is going to do is this is going to help give me the value areas of this particular piece of price action that I pulled here. So I can do this. And if you're interested in how I do this, I will be doing a video on it. So definitely subscribe if you're interested, but I will be doing a video on how I pull these and why I pull them from certain areas. So this is your value area high, point of control, and your value area low. I'm going to delete this. So, and you can see like, so this is of this piece of price action, right? So this entire portion of the chart right here. So where does it line up? Well, I'll tell you right now. So first off, this point of control it's a pretty big support that you want to see held. So this point of control is the point of control for this entire section right here. So this is a very important level, and you can see prices above it. You definitely want it to hold as support for continuation higher. So trading value areas, you got your move down to your value area low, which again, phenomenal, right? Price comes right down to your value area low, daily support. So this, I didn't know this, to be honest. I just pulled this. Like, had I pulled this yesterday, it would have likely, I maybe would have sized up a little bit more in my trade. That's just me though. But you can see that came down to your value area low, currently above your point of control, which is good. And then where's your value area high? Well, it's pretty darn close to your golden pocket. So again, this brings this, as far as like confluence for this Fibonacci retracement being valid, is even more so now. Like, this is even more so. Like, okay, so there is some other legitimate resistances near this golden pocket, right? And just for fun, see if this does anything. So I pulled a Fibonacci retracement from this high. So basically you had your all-time high, big spike down, right? And then you got your lower high before making a lower low. So this is also a valid pull. And what do you have? Your 786 retracement of this lower high to your ultimate low. So you have your 786 retracement sitting just below value area high. And then you have your 886 perfectly lined up with your 66. So this is called Fibonacci confluence, meaning that you have two or more, depending on how many you pull, but you have two different Fibonacci retracements that are lining up together. So that makes this level for me even stronger of a resistance level. So if I were to draw a box, for me, this red box is likely to be pretty big resistance if we do manage to get price up here, which if price comes up here, right? So if price comes up here and gets rejected, you're in danger of making another lower high too. So this is also like really critical level to pay attention to if price does manage to get up there. So this is on a local time frame, right? Like hourly, small time frame. So you know, as far as, so I have on my other chart, did I delete it? Yeah, I did. So if I put this back on, this is just to give you an idea, right? So I have my levels down here, my daily, so this is my daily key June, your previous all-time high. I know you had a pivot here. If I turn this back on, so you have your monthly pivot sitting right in this zone, and then also your 55 EMA. And I mean, honestly, and your this was also your golden pocket fib retracement from this swing low to this swing high. So if you remember that, I'm not going to redraw it, but so there's a lot of confluences to go along for me, okay, in this region. It's an area that I would be interested in. I'll just draw it out real quick again. I think it was something like this. Okay, so this is an area that I would be interested in. And then if I make this box bigger, this is where I think there's going to be a lot of resistance if price manages to make its way back up there. So this is like a really good example of how I take essentially a blank chart and I map out my support and resistances that I think are valid, like that I think that I want to pay attention to. And like, so like in between here, right? Would I be taking a position right here? No. And like, I really like to scalp. I scalp actually quite a bit. I would scalp in here for sure. Like, I wouldn't have an issue. Like, you know, if I see a setup on a low time frame, I'm going to take it, right? But as far as like a swing trade goes, I'm not interested really in a swing trade until I come up to one of these levels. And like hypothetically, if we come up here, I would be, you know, I could maybe be interested in a short position because I expect for this to be really, you know, pretty important resistance. And like the invalidation for that's pretty easy, right? So let's say hypothetically I took a short here, my stop loss, like just to show you. So let me, now that I kind of have this mapped out again, I'm going to turn this off. That way it's a little bit easier for you to see. Maybe, if I'm lucky. There we go. So again, let's say I took a short position and my average entry was right here. I would look to take it probably back down to the lows, right? Where your value area low is. If this is still your value area low, I would be look to take it here, maybe even all the way down here if price looks, you know, if it looks really weak and I think it could go lower. But either way, the important piece of this is your invalidation could be really close to your entry. So this is what I like, because I know like if price reclaims this, I think it could get, like, I think that would be very bullish. Now, obviously, like you could swing fail these highs, like, or this high here, you could swing fail it and still go back down. And that, again, that's another, I'm not going to get into how I would trade that right now, but that would be another very easy entry, and you know where you're wrong. Okay. So, but again, for this particular setup, if I were to short here, you know, if price just came, marched its way back up here, for me, the risk reward for a short here is pretty good, if you ask me. But I know what the overall trend is too, right? So if the overall trend is very bullish, like we are, I'm a little more hesitant to take the other side of that. So like, I don't like to short really in uptrends. I'll do it if I'm given a really good setup, but I'm definitely a lot more careful with going against the overall trend, and vice versa. If I take a long position somewhere down here, right? I already explained earlier, like where I'm wrong on that trade. If we lost that weekly at 38,000, I'd be pretty concerned, right? But again, so this is basically how I map out areas of where I'm interested, where I think are really big support levels, really big resistance levels, and I adjust my trading accordingly. So, I mean, that's essentially it. You know, as far as like, I mapped out for you guys, like where I think currently, like this is the resistance that I would be looking at. If I fix this, go back out to a daily. You know, I've mapped out where I thought would be potential support, area of interest for myself. And right now I'm in no trade. So this is kind of like, again, for a swing trade, to me, this is a no trade zone. It's not financial advice. It's just for me personally. I don't really see a killer setup that says, hey, I need to size up and get into a trade until I see something that I'm comfortable with. And for me, this is somewhere more around here. And I would obviously prefer a long. I really would prefer a long over a short, but I will take a short trade. And like, could this end up being a swing trade? Yes. You know, like if I did take this short, you know, let's say price worked its way up and I did take the short, like you know, it could end up being a swing trade, a longer term trade, but you really don't know until you kind of see how price develops. But for me, if I did take this short and, you know, price came back down to value area low or something, I would be taking profit for sure. Like I would be taking some off the table, not financial advice, just how I would trade it. But I think that's pretty much it. I went over Bitcoin on the high time frame analysis. You know, again, we looked at this, we looked at your logarithmic growth curve. You see like how this works and how accurate it's been. And to me, again, like from what I see here, we're in another, you know, big time bullish upcycle or uptrend. And I'm looking for the top of this to be hit at some point. Wherever that is, when it happens, I don't know until it happens, but this is what I'll be monitoring. I went over, you know, again, the pullbacks. You know, basically the moral of the story here is don't be scared. Like they happen, it's part of trading, but be prepared for them and, you know, make sure that you trade accordingly. I went over my Pitchfork here, which I think is a really useful tool. Again, you know, I'm looking at if, you know, Bitcoin manages to hit the top of this Pitchfork, where does that happen? I don't know yet, but that would be an area of interest for me. See if it lines up anywhere else with any, you know, levels of, you know, like if there's any other resistances that I see going forward. And then obviously to the downside, this is one thing that I didn't mention in my, you know, recently, but I would also look at my Pitchfork levels to see if they line up with any of these levels as well. So that's pretty much it. Hope you enjoyed this video. Like, comment, subscribe. I'd really appreciate it. This is a new channel. But anyway, you guys have a great day out there and stay safe trading.